All right, we're here today. We're going to do exits and trailing stops. And I'm going to I'm going to start this off. I'm going to share my example of how I trail my stops the majority of the time at the end of this. So, I'm going to start with some of the basics that are used. If you can't hear anything, check your settings. Might be a setting issue. Can everybody else hear me fine? I know you can because you've been talking. All right, JL, I hope you get it figured out. But check your settings down here by your name. If someone can help them out, that'd be great. So let's get through this. Trade management types. The one I want to start with is the one that is very commonly used in lower time frames. So if you're not a swing trader, these are used very common. They're hard exits, and swing traders can use them as well. But more than likely, if you're using them on a swing trading level, you're using levels that are in a much higher time frame. So if you're trading a 4 hour, you've got weekly support resistance levels. But these hard exits are pretty much going to be your lower time frame traders, people that want in and out. They've done their work. Oh, I need to share. They've done their work, and they're going to see a higher level, a support resistance level or something, and they're gonna get in and they want to get out that day. Intraday traders, they want to hit a specific level. The thing with hard exits is you're taking a piece of your pie. Okay, you're not trying to get the full run of the move. You're trying to get a, a piece of that. Um, the first one and the most common one is support resistance levels. So if you have a support resistance level and you've got your price coming up to it, you want to be able to have your stop. Let's color this guy red. You want to have your stop, your take profit, pretty much just below it, so that you know it's gonna hit. Because sometimes it can do like this. It'll come up and then come back down. So really, for support resistance levels, like if you got in off of a bounce here, you got in on this bounce and you're going to get out at the next support resistance level, you're going to want to be just a few ticks. I don't have a number, okay? I just eyeball it. I just want to see a gap there. I don't have a specific number. I'm sure maybe that could be figured out if you really want to dig into it. But I prefer to just eyeball it. I would have eyeballed this. I would have been missed here. But as soon as I saw this guy, I probably would have gotten out, because that's a big reversal. And so when you're trying to take profit at a specific point, you have to be aware of moves like this that don't quite get there. So that's a crucial one to know. And you'll see that if you're an intraday trader, you're watching the charts, you're checking it, and you're seeing what's happening. You might have got in. Let's say you got in on this candle. You got this beautiful reversal right here at the bottom. Looks like I could put a support level right there. You got a double bottom. You came up, hit. You hit again. You got a great rejection. You got a confirmation candle, so you entered at the top of that candle. Change that to green. So you entered here and you put your stop loss down here. And according to how much room you got, you pretty much could just leave that stop loss there and wait. But as soon as you saw that this guy didn't quite make it and you got a pull down, I would probably get out at the end of that candle. Or I would move my stop loss. Let's call this one the stop loss. Yeah. I would have moved my stop loss at least to the bottom of that candle, saying, okay, you're not going to go any further down. And that way you get a small profit. Because you're not always going to get full move. You're not always going to get all of it. You're just getting your piece of pie. So one of the big keys about support resistance trading or support resistance level taking profit, one of the bigger things that I like to do is go back. I want to look at my support level. How is it being hit? So this one, it got hit coming up. It got hit from the bottom. It broke, came back, hit the bottom. So I've got 2 or 3 good areas. These support levels, by the way, are on the weekly time chart, and I'm in the 4-hour. So these have power because they're on the weekly time frame. And you want to check and see how strong it is. How many hits has it gotten? Another thing you can add is it being hit mostly from above? But whenever it comes from, when the price comes down on it, it just kind of blows past it. Those make a difference because for me, like this is an all-time high, so I would have it up here. All-time high is always strong, even if it only has one touch point. If I was watching price along here, we came up, we fell back, we hit, we fell back hard right there. Came up, we got a bounce, we got another bounce, and it kind of kept going. So this one here is a strong one. I would be careful of up and down. So I'd be concerned about both directions. But sometimes your support resistance line can be a bunch of hits from the bottom, and you're looking to take profit from the top, from price coming down. You got price coming down like this. I know it's not how it looks. You could put your stop loss just on the other side of that, see how it reacts when it gets to it, and if it's wanting to bounce back, then go ahead and get out here. If price is coming down and going down and comes just barely inside and starts coming back, again, you want to get out up in here somewhere once you see that reversal off of that. But if you put your stop loss here, there's a chance you might just get one that breaks through and then comes through. So that's if it's weak from the top, from one side or another. This would be the same thing going up. If it was weak, holding the acting as resistance or support, no resistance, then you could do that. But most of the time, put your stop. Like I said, just put your stop. This is always the safest bet. But check your support levels. If you're taking profits at a support level, always go back and check it. See if it's still being used. See if it's still being a support level, support resistance level. Sometimes they start fading out. We took and marked them, a month ago. In the last month, it's come across those like it was nothing. So check them. Make sure they're still good. The other option is taking price at a trend line. So if you had you're looking at a trend line You're in this here, and you know that it's coming down to this new trend line. You took price. You know, that was a bad line. Hang on. See if we can get this. So you got in here and you're thinking, okay, I'm going to take price here. You kind of just, I get confused because on Thinkorswim that's called duplicate, not a clone. So yeah, you can just put your stop loss down here. You can wait and see if it's going to hit. But this, if you're doing a trend line, it's usually already got 2 touch points, so this will be a 3rd touch point. So it's something always to consider if you're looking at taking a price, taking profits or exiting at a trend line. Be ready, because if it actually bounces off of that, you may be in a bounce move getting ready to break an upper trend line. So just be aware of that. That's definitely a possibility. So again, think about these. If it's got 2 touch points, this could possibly go past. I might give it a little room and let it go a little past it. If it's only 2 touch points, if it's a 3 touch point trend line, has a little more strength, it's gonna want to go past. So that's another option if you're taking at the support resistance or trend line. Trend line, I'm usually, according to how far it's going, how much money I'm wanting to make, I'll take it just before. I don't use that hardly ever myself personally. Another one, and this is more scalper focused probably. This is how I see it. This is the people that I know that use this method typically are getting in and getting out pretty quick. And that's using a tick amount. We all know that Mishan on Dory's group did his New York Open with M&Q for 150 ticks. It didn't matter if it went further. It didn't matter anything. It was just a matter of getting 150 ticks. It was something he had tested and proven that over time he could get that 150 ticks. Dimitri here in our group, he does 35 ticks, I think, for gold and 50 for M&Q. He knows he's going to get that. And once he sees his setup and his play, he gets in. He marks a take profit at 100 or at 50 ticks or 35, according to which instrument, and he gets it. And he knows that four contracts gets him this much money, and it's scalable. Once he gets super good at it and comfortable at it, it's something he can add 5 contracts. He can do 1 in the mini. He can scale up on it. And I think that's the biggest thing when you think about your exits now. If you're not too extremely focused on the dollars and just finding something that's consistent, then make sure it's something you can scale into. I know someone, I don't trade Forex, but I watched a lady who traded gold, and she knew she could get 100 pips, whatever a pip is. It's kind of like a tick, but in Forex. And she traded 100 pips every trade in gold. She knew she could hit it. She had super confidence in it. And she divided what she enters into 4 lots. And she would enter with 1 lot. And she knew that at this point she was going to add a lot. If it broke this point, I had another lot. If it breaks this point, I add the 4th lot. And then once it got like to 75 pips, she started scaling those out up to 100 pips. At 100 pips, she's gone. She's done with the trade. She doesn't care if it goes higher or anything. She comes out with, 11 grand and happy. Like it's very scalable. It's something that she just knows she can get. She trades on the 5 minute time frame and does very well. So tick amounts, usually you want them small enough to be predictable. And you want it to be consistent. You want to find, if you're doing tick amounts, you want to find a tick amount that is something you feel like you're confident that your setup will get you this many ticks. And don't change it. Don't keep changing it, trying to reach for more dollars. Get good at that tick amount. It's a very, very used setup. It's a very used process for people who want quick cash. A little bit more scalpers, but very, very good. The other fixed amount is just a plain old dollar amount. Okay. You good for prop traders, yes. Dollar amount. This is typically focused on an RR percentage. Most people that do a dollar amount, they go in, they say, okay, I can get in this trade. My risk is going to be 200. So I want to hit, and where I want to get out is going to be at 400, a 2 to 1. And so they're going to see, where am I going to get hit at 400? And is it possible for price to get to that point? And so that's what they're weighing when they're doing that. So it could be a 3 to 1. A lot of people want to just get, they all their trades are based off of a 3 to 1. Even if they're in the 5 minute time frame, they enter, they got $75 stop loss. They want to get $150, or well, I'm sorry, $225. They want to get a 3 to 1. And they look and they see that their chart can actually support that. And so that makes that trade acceptable. Definitely requires knowing your instrument and the move potential for your instrument. Some people doing support resistance levels will say, okay, if I get in here and this is my stop loss at 100, am I going to make 300? If I'm not making $300, I'm not getting in. It's not worth it's not worth the risk. Sometimes it might be 200 and say, okay, I can do a 2 to 1. There's a lot of traders, a lot of professional traders that I've watched in interviews and stuff on, who focus on a 1 to 1 and a 1 to 1.5. Another thing with both of these last two, if you're doing multiple contracts, you can get in, sell half your lot or one or whatever. You can sell a portion, scale out a portion of your contracts, and then you can start trailing the rest. However you want to do that. You could get out at 75 ticks, half your batch, and you could have another stop for the rest of it at another 75 ticks. Or dollar amount. Maybe you want to do a dollar amount. You've got a 3 to 1 set up, but you got three contracts, so you're going to sell one at a 1 to 1, and then if the price moves up to a 2 to 1, you're going to sell another one, and then you'll sell your third one at the 3 to 1. So those are fixed dollar amount methods. They're good because you know you're going to get what you get. What you have to do when you do those, you have to be okay with price taking off after you're done, because it's going to happen. You just got to look and say, you know what, I got my piece of pie. This is scalable. We're all learning right now. We're all trying to find that consistency. Once we get the consistency, we get the confidence. Then we can start scaling in and building the wealth, building the money better. So always think about that. It's going to be scalable. You're just not going to get rich on one trade. Just remember that. Trailing stop methods. Okay. want to use this one. Let's see what I can find here. This was a pretty good move here. I'm going to get set up here real quick. Okay. Let's say here we have a 2 touch point trend line. You've got a nice little bounce off of a level here. And you're going to take this basically a two trend line break. So you're going to get in right here. You're going to put your stop loss right here. And you have this safety line. It's already established 2 touch point. Now price is going to go up. It's going to come back. It's going to go up. It's going to look good. And then it's going to make you scared. At this pullback right here, this first one I would never, when I did, I would never do a steeper trend line off of the first one. Always waited for the second one, personally. So then, once that second one hits, you could run a steeper trend line. And now, you've got this pullback and this pullback right here. If you notice, it cleared this candle right here. So at that point, you could take and trail this stop loss from this trend line would be right about here. You're basically staying under the trend line, under that pullback. You've now literally cut your risk here in half. You've cut it in half. So if you were risking 200, you're now risking 100. Now you're going to watch this go up, pull over, it comes back, you make a new trend line, and now you can put your risk just under here. And I always try to just keep a little space, but I'm based off of a pullback here. Now it comes up, goes over, it breaks off here. At this point right here, and this is because you drew a steeper trend line, I would put my stop loss right here. Just a few ticks below that. Now my lines are going to be messed up. So yeah, I would have pulled that. Sometimes the marketing tool is kind of a pain in the butt. Let's go here. I would have put my stop right here. Where it broke, I would give it just a little bit of room, let it go sideways. Might have got me out right here, but if it didn't, then it started going up. Now I would take this trend line and move it to that point. So if you can handle these little pullbacks in price, the safety line can work. My tagging this safety line on in my back testing, it only gave me a 35% win rate. So I'm not opposed to it, and I know a lot of people that use it and are good at it. So it might have just been my trading, but I definitely know that it was much better results if I went steeper than if I just went to the original. And that's based off a 4-hour time frame trading. So that's the safety line. Definitely, if you can, use a steeper one to help secure risk and help you through drawdown. I mean, honestly, this sideways This whole thing right here is excruciating when you're a swing trader. It's excruciating if you're in the 5-minute time frame and you're watching this. Most people won't tolerate it, and they'll just get out before it even hits their stop. So know that trend lines are good. I'm not going to be real big on them. I hardly ever use them anymore. Once I got away from trend lines, I started seeing a lot more profitability and a lot lower losses in my trading. The other one is trading by a pullback, which we kind of just did here. Let's say I'm gonna remove this and say we're a support resistance trader, okay? And let's say I'm a support resistance. Let's just say we had a little steeper trend line here. I saw this break. I want to get in at the top of this candle. Oops. So I want to get in as soon as price breaks this candle. I'm going to get in right here. I'll have my stop loss here. And now what I'm doing is I'm waiting for a pullback. So we got in, price came down. This is a pullback here. Price went up. I'm moving my stop loss to just underneath that. I'm waiting for the next pullback. Price comes up, pulls back. I don't move my stop loss. I might move it there because that's a good candle, but I want to wait until it breaks this high. As soon as it breaks that high, I'm up here. And again, every time I do this, it's a little gap. Now we come up, we have a pullback, and we break the high here. So now here's a big decision. Do I go and put it up here? Let's say I did, I'm going to be knocked out here, which is fine. So that's those little nuances that you got to figure out on your own. The other option is you saw it was not a strong pullback and it only 2 candles up before it went sideways. So maybe you wait for a good pullback. Now you're here. This is your stop. Price comes up, you're moving along pretty good. You get a little pullback, but it never gets to where it's clearing up here. You're waiting almost till it breaks up here, and you'll probably put your price up here. Now you got your price going, moving along. It comes up. I would count that as a pullback. Plus you have a support resistance level. So as soon as that price takes up, I might go right here. As soon as I see that go up, and wait this out. And now I got another pullback. That's a good pullback right there. Come up here. Now I'm out here. So I got in here, walked this thing up in the 5 minutes, probably like 3 hours, 4 hours, and got out up here. Very good run for the money. So that's trailing the pullbacks. You're just waiting for a good strong pullback. I don't move my stop until I get to the top of that pullback. Until price gets back to the top and I know I'm safe. Definitely want to always be aware of support resistance levels when you're doing that. That makes a big difference. You want to make sure you're you know where your levels are, so that you want to be, even if you get a pullback, you want to be a little bit more below that support resistance level. Never, if you've got a support resistance level, let's say this is your support resistance level, which it could be, and you got this pullback up, you're here, and you get this, you catch this guy here, You want to just make sure the stop stays below it for a while. As soon as it gets up above, you're in danger of price coming down and spiking you. So if you can't move it up past that support level, like you don't see price moving strong above that support level, stay just below it in order to not get wicked out. All right. My system. I got my system. I developed, I don't want to say I developed, I saw traders using this. Honestly, I have. I learned from day traders. I saw this on YouTube. And then I saw Tom Halgard using a version of this, trading in the 5 minute time frame. And I adapted it years ago. And it was back when I swing traded stock options on the daily chart. And I went back to it once I realized that the win rate and the average win-loss rate for the safety line really was risky, and I didn't want the risk. So what I developed, I can't say that. I didn't develop it. What I adapted was a combination of all this learning from other people on how to trail by candle. This is my go-to. When I backtest, I go to it. I don't need a safety line. If majority of my trades, when they're done, if I didn't have a safety line, by the time I get knocked out, you can see that there were a steeper safety line would hit it. So I'm very, very confident in this. In the 1 hour and the 4 hour, I do not trade lower than that. I do know some who have adapted it and said it works in the lower time frame. Personally, I do not have experience on that. I'm going to show you a quick example of what I do that in the same scenario, and then I got a couple charts I'll show you. So I get in here, same scenario. I'm getting in to this trade right here, top of that white candle. We got a beautiful bounce play. I need confirmation. Some people will jump in on this candle. To me, I don't know that I need something that tells me you're going to clear this big candle, or at least the last candle. So I'm going to get in here. I'm going to have my stop loss here. After 3 candles, regardless of what's happening, after 3 candles, my stop loss is going to go in just below this action line. And the reason for that is, and you can do this yourself, go back to your back testing trades and look at how many times your winners, the price crosses back over the action line. Do a count 100 of your back testing trades, of your paper trades, I don't care which ones, of the winners, how many times did it go back across your action line? My findings was 90% of them never came close to going back to that action line. The other 10%, majority of those barely wicked through, and only 2 of them out of 100 actually crossed back and went on, and both of those I could have been knocked out, readjusted my trend line, and took another trade after a few candles. So it would not have been devastating if I had my stop up tight, got knocked out because it created another B, kind of went sideways a little bit before it took off. So knowing that, I'm okay after 3 candles. The 3 candles is only so I can avoid the wicking, any close wicks. Now I'm in here, and I've got my 3 candles. I've got this guy. I'm looking at this guy right here, this white candle right here. Let's blow that up a little more. I'm looking at this white candle. I want a candle that the body is going to close above this. This one, obviously above it, but because of the candle type, I'm not excited about that. I don't want it. So I'm probably going to wait until we get to this guy. And I'm going to move my stop to just below that guy. And now I got knocked out. But I made that much profit. And I need to kill that. I did that backwards. It's messing with my brain. Now I have a new trend line here with a touch point. If I need to, if I see another, if everything's working after a few hours, I can get in on another trade at this break. So did I really miss anything? Missed some sideways movement and stuff. So that's mine. So I might get knocked out a little early, but you can see right here, if I was actually running that first bunch as a steep trend line, I would have been, I would be fine. This doesn't happen very often, but it's protecting me. I'm moving my price up faster than it pulls back on me. Okay, this takes practice. I want to show you some trades. I'll show you this one here. Unfortunately, I can't blow this up very well. Yeah, no, it's just blowing the background up. All right, let's look at this. So you can see where my stop loss was put. I was getting in, I got in after this support resistance level. I entered here. I moved up. I entered in with 2 contracts. I moved up. Price moved up and got to, so I had, let's say I had a $200 stop here. I probably hit a $200 price and scaled out one. At that point, I would move my stop here. And then I'd move my stop here, just below this support line. And then I'd get this move here and move my stop here. Now I'm waiting for something to break this point here. And you can see, oh, this was, I had 3 contracts, so I scaled out twice. I got exited here because I had this candle right here, which was another good one. It cleared the body, cleared the wick. It's a strong candle. I moved my stop to just below the bottom of that candle and got out there. That was a $400 trade on MYM. That's a pretty good move for MYM. So that's kind of what I'm doing. I'm watching this. If I got a good break, like I had a good break right here, but if I went and moved that, that's that point where I was telling you, if I move my stop loss to just barely above the support line, I'm taking the chance of getting wicked out. There's one other facet to this this method. I've only used a couple times. One time in real trade, live trading, a couple times in paper trading. And that's doing this candle trailing in a higher time frame. So if you're trading the 5-minute, you put up another screen and kind of watch your trade in both 15-minute, 5-minute. You move your stop to the bottom of the 15-minute candle. So that you're essentially 2 or 3 candles behind as you go. So for me, that would be entry in the 1 hour. Again, scaled out, locked in some money. Now I'm going to trail my stop. And I'm probably going to go here, right here at this entry level for break even underneath this candle. This was the next big candle. And now the amount underneath is just arbitrary. It really is. I do not have like, oh, you need to be 5 ticks or 3 ticks or anything like that. It's just arbitrary. I do what feels good, but I just want it below the wick of this strong candle. Now I don't have anything, but we start breaking this. We broke this candle here, broke the support level. So I'm probably going to put my stop right here underneath that one. And it was at this point right here on this particular trade that I jumped up to the 4-hour time frame. So remember, my last stop was just below this point. Now I'm looking at the 4-hour candle, and I see a good candle here, so I want to put it underneath there. And you see how it came back? It pulled back and still didn't hit the bottom of that candle. And this is why I do this. The bottom, these candles, if it's a good strong candle, the chances of price falling back and below that candle is usually the end of that move. So now I got this move, and then I got this move. So now I'm putting my stop here. I don't like that one. Not very strong. I like that one. The body broke this wick of the last big move. So I'm going to put it down here. You got this one, broke that all-time high. I'm going to put that here. You got this one that broke this wick here. Right? The body of this candle broke that wick, and it's a strong candle. So I'm going to move because we're still close to the support resistance level, I'm going to move this tighter, but still underneath the support resistance, the all-time high, and wait for the pullback. Now that I got a pullback and another good candle, I move here. And then we got a good move right here. This would have been the next good move, this candle right here, and you can see that's where I got exited out. So I switched from the 1-hour time frame to the 4-hour as I was going along. And if we're going to get a move like that, why stay in the 1 hour? If I stayed in the 1 hour, I might have gotten knocked out earlier. So that's another concept that you can do with the trailing by candle. Oh, and that one that I just showed you, that where I got to the 4-hour, I was getting ready to go by, because I was up in P&L so much on that trade, and that was a back testing trade, guys, mind you, that I was just switching to the daily time frame, and I was going to start trailing by the daily candle. So I was getting ready to jump up another level. I mean, at that point, I can sit and hold, $1,500 profit and wait for a whole day and just check it on the day. Yeah, definitely. We got some questions here. Sometimes I can't decide if price will go to opposing trend line or support resistance first, but it's almost always super strong when both intersect. Yes, when you get both of them intersecting, definitely that's where I do a lot of my bounce. I love a bounce. If I have a trend line and a support resistance level, and I got a nice little doji, like a look, if this was a support resistance level, and you got this little bit, I'm in that. That's a beautiful 0.2, 2 point, 3 point, whatever point it is on a trend line. That's beautiful. Getting in. That's awesome. For me, it's also got to meet a bunch of other criterias before that, but that's what I'm looking for in a bounce. That intersection. At the open, the consistent tick. You're creating new level for trailing stop loss, not previous. To clarify. I'm not sure exactly what you were meaning by that, Alicia, but because it could have been during some other part of the conversation. Are you talking about the break and retest of the line? Your breakout candle did not cross action line, just 2 out of 100. Are you talking about the break and retest of the line? I wasn't really trying to show entries. I was being really rough with the entry portion of all this. I was more focused on the trailing of the stop loss. You could keep it close to the last candle, especially when price does a big move and you're at the extension. Though you gotta wait for the candle close. Yes, you gotta wait for the candle close, and you shouldn't move it if the candle is like a doji or indecision candle. You're absolutely correct, Sly. I call them Twizzlers. Anything that's a indecision candle, doji, hammers, hanging man, whatever. My nickname for them is Twizzlers. But yes, I never move on anything that is not substantial. I want a good, strong candle. And I want the body to break the wick. The body needs to break the wick of the previous hot, strong candle. It can't be just the wick breaks the wick. I find there's weakness in that. There's strength when the candle closes and the body is past the wick of the previous strong candle that your loss is sitting under. Yes, if you're going to try that higher time frame, you could definitely do that. Just count your candles every 5 candles and look at your 5-minute candles and see if your 5-minute candle looks strong. And then if that 5-minute candle looks strong, get your stop underneath it. And then you're watching the 1 minute, but you're trailing by the 5-minute candle. You could be a little more discriminate that way too. A little more relaxed with what you're doing. When you're trailing a higher time frame, your lower time frame candles are going to be all over inside that. So that's pretty much all I have for exits and trailing candles.